Hi there, welcome to Grain TV. It's Wednesday, May 11th. I'm Kevin McNew, and we had a down day in the markets after yesterday's skyrocketing higher for soybeans. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was off 3 1/4, beans off 5 1/4, and wheat off 2 1/2. News today was pretty light. There wasn't much direction for the market to trade other than maybe give up some of yesterday's gains. But news was sort of centered on Brazil's situation, where the Senate in Brazil is now today holding session to talk about impeachment vote against President Rousseff. And this is all tied to her problems in the last 2 months, and it's likely, at least it seems to be likely, that that will go forward, and that has kept the Brazilian real strong and kept it rallying as of today as well. Export news this morning: we had another soybean oil deal, this time 30,000 metric tons to unknown for old crop. This is 2 days in a row that we've had fairly big announcements on soybean oil. I guess the take on this is that Argentina's crop problems, they tend to be a major crusher and producer of soybean meal and oil, that this may start to shift some business to the U.S. shores, and these two sales seem to confirm that. In weather news, the U.S. seems to be on par to have another good week for planting progress. There was expected to be some rain in the eastern part of the Corn Belt, but so far those forecasts have turned out to be not as bad as expected. So looking ahead to next Monday, we'll probably see another big week in terms of planting progress for corn, which should be getting closer to wrapping up. We were around 65% last week, so I'm guessing we'll be in the 80 to 85% come Monday. And beans as well should have another solid week of planting progress. Other news today: ethanol numbers from EIA. These were bullish for ethanol and bullish in turn for corn. Production was up 38,000 barrels a day to 962,000 barrels, and stocks were off nearly 1 million barrels, to 21.25 million barrels. So that is so supportive again for ethanol, which has sort of just been following the heels of the corn market. In other news, let's talk about the situation with soybeans, and in particular, everyone was sort of taken really by surprise with USDA's projection for new crop. In particular, USDA was expected to see about a 400 million bushel carryout from new crop 2016 marketing year beans, but instead they got close to a 300 million bushel carryout, which was very surprising and of course led to the 53-cent rally yesterday. And what hinges a lot on that expectation from USDA is a very, very sharp recovery, not only a recovery, but a record large level of exports for U.S. soybeans in the coming marketing year. And certainly most people were expecting an increase. We were off this year compared to the record in 2014, but the magnitude of the increase at this early juncture of the season was pretty shocking, of course, to the trade, and that's what we got the big market move on. Now, the question I have is it supported based on where we're at today? And the answer is unequivocally no. Where we're at today in terms of our export commitments for new crop are disappointing at best in reflection to where we've been in past years. If we look at the historical record of year-to-date new crop export sales at this time of year, so this would be comparing 2016's new crop delivery to 2015 at this same juncture last year, we can see this year we only have 2.8 million metric tons of commitments. Last year at this time we were at 3.9, and if you go to the record year of 2014, we were 7.9. So you got to go all the way back to almost 2010 to see a point in time where our commitments year to date have been as bad as they are this year. Now, that's not to say they're not going to get better, and they probably will. Certainly the strength in the Brazilian real is changing our export competitive situation. Certainly the shorter crop in Argentina and to a lesser extent in Brazil will help our situation. But USDA has put their trump card on the table with a very, very big export number. And so my concern is to keep that number a realistic figure. We're going to have to start to see export sales pick up and pick up quickly. And I'm not sure that's going to be the case. So, keep your eye on those Thursday export sales numbers. We'll get one out tomorrow morning, but we need to start seeing some fairly sizable commitments in 2016 new crop delivery for this market to keep holding these gains in light of these very lofty export expectations by USDA. That's all we got today. As always, if you're interested in how we can help you in your own marketing situation, give us a look on grainhedge.com and take a look at our free demo and our morning commentary we put out every day. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.